Hey guys, welcome back to Charlotte Mortgage Insights. Today we're talking about the powerful tool of asking for sellers to pay closing cost concessions. Now, back in the fray of 2021, you could never get a seller to pay closing cost concessions, let alone even get them to pay for a home warranty. But times have changed and houses are staying on the market a lot longer. This is kind of a follow-up to the video that we just did on the 2-1 buy down. So if you haven't watched that, check that out on our channel as well. But today, again, I am here with Eric Coombs, a business partner here from Alcova Mortgage. And as we see, this market has shifted quite a bit over the last few months with houses staying on the market, some of that being seasonality. We are seeing a lot more sellers open up to paying closing cost concessions. And how much money can you actually get a seller to pay, maybe in lieu of a price reduction to put more cash in your pocket? That's what we're talking about today. So, Eric, how many closing cost concession deals are you seeing coming across your table nowadays?
Man, I'm going to tell you, over the last 5 or 6 months, I would say on just about every deal that we're closing right now, it's a necessary tool to help, get people in these homes. And it's a great conversation that's been coming up after the pre-approval process. That is super important, because if you are going into the shopping part of the transaction, right? You're pre-approved, you got an idea what you're looking for. Those are indicators that you want to look at, right? How long has that home been on the market? Where are you at on your budget? Because what we see a lot of times is people can afford the monthly payment, but that cash to close might be a little tight. So if the seller paid closing cost opportunity exists, you might go look at some homes that have been sitting for a little while, because 9 times out of 10, you're going to be able to get that and help move that home and get you in the home that you're looking for.
Yeah, exactly. So on an FHA loan, someone could get into the house with 3.5% down payment. All right. So let's just take a house price of $400,000. Get in the house with 3.5% down payment. What's the number on that? Don't have a calculator, but go through my head with it. Probably about 14 grand, right? They need for down payment, somewhere in there. If you're doing the math at home, I'm probably wrong, but I'm probably pretty darn close. But in addition to that, you're going to need probably on that size house a good 8,000 to 10,000 in closing costs, depending on property taxes and homeowners insurance, right? So now you're talking about $24,000. So if you got, on our side specifically, if we have a buyer that is going to make an offer on a property, but they're like, let's see if the seller will come off the price $5,000 or $6,000. It's like, well, let's actually think about this differently. What if we ask the seller, or give the seller what they're listing it for, but ask them to pay $10,000 or $12,000 towards our closing costs? That's going to help put more cash in my buyer's pocket, especially as you mentioned, a lot of these people sometimes can't afford the payment. That's not the issue, but it's the cash to close. So that's why I think this is an important topic to talk about right now, where there is a lot more seller motivation than there ever was. So are you seeing closing cost concessions on all types of loan products, or is it more geared towards the FHA, or is it all over the place?
On just about every FHA product that we've had lately, I see seller paid closing cost on there at a high number. I would say the conventional, it's probably 2 out of every 5, but on the FHA, we're seeing this a lot more, because typically the budgets are a little bit tighter. The payment's not an issue, but it's that cash to close. And if you can get that right back in your pocket at the closing table, that helps get people in these homes.
Yeah, absolutely. So just so our viewers are aware, every loan program has a different amount of maximum seller concession. So as we just mentioned, FHA is at 6% of the total purchase price. On a conventional loan, it's going to be 3% maximum seller closing cost concessions if the borrower is putting down 5%, but that does bump up to 6% if the buyer is going to put down a 10% down payment. Now, of course, there's also VA loans, and the VA loan concession cap is 4%. So as you mentioned, you're seeing it on all over, all types of loans, but it's a powerful thing that, and I know people know about it, I know people talk about it, but a lot of times I think it's a better option than a price reduction just from a seller, because it's more cash in your pocket. And if you can couple the closing cost concessions with a 2-1 buy down, that's a double whammy, right?
Yes, absolutely. Use all the tools that are available. And that's why it's so important to work with local lenders, people that have boots on the ground in their particular market, because for instance, we can tell you what's going on in our particular transactions and what we're seeing. And that's a powerful tool for you as you go into the market of home buying. There's a lot of pressure on the sellers right now, right? The homes are listed for a reason. They're either wanting to move on to their dream home, or they're going through a life change. Could be career change, could be a divorce. And, sometimes that seller paid concession is the deal maker, right? This transaction can happen now with this, or is that seller going to be reduced to do a price drop and continue to leave that on the market? A lot of people are going to bite on that concession and make that move.
Yeah, totally. And think of the scenario I've got two questions for you. Let me go to the second question I was going to ask you. In the closing cost concessions, that's outside of the 2-1 buy down contribution, right? That's not combined together, right? So you can actually do both, correct?
You can do both. It gets a little bit more complicated when you try to introduce all of those together, because there are limits that they still got to fall into, right? Depending on the purchase price of the house, that's going to limit how much concessions can actually take place in that 2-1 buy down. So a lot of times we got to combine those and take a look to see if it works. But a high dollar purchase price house, most likely you're not going to be able to combine both. But if you find, a single family home at a low price, there's opportunities where we can double down on that. Yeah, absolutely.
Yeah. So in the scenario, if you've got a $400,000 house and someone's going to go FHA, 6% total closing cost concessions on $400,000 is $24,000. So if the 2-1 buy down hypothetically costs $10,000 to fund the buy down, you've still got $14,000 left over to use for closing costs. And if the closing costs are only $8,000, you've got another $6,000 to use to buy down the interest rate in some cases, right? So
that's right.
That's powerful in that scenario right there. So that to me is much better than a price reduction from the seller. But, those are the things we're educating our buyers on, especially now when the sellers have, again, that motivation to make some moves to get their property sold.
Yeah. And, a lot of times the price reduction is just a hope, right? Maybe us lowering the price will get some more activity, or it's going to change our search. Right? People are searching for certain price points, and that's a lot of hope right there. But if a deal is on the table, this transaction can close if we take advantage of these concessions. The seller's going to bite on that in today's market. To your point, market changes all the time, and we see different sides of that. So a couple of years ago, there wasn't even a question. But right now, it's moving homes, which we find very interesting, right? We do a lot of presentations and we speak a lot, and it's interesting. The people that say they're really busy right now, it's because they're using tools like this to move the product. The people in this industry that are saying that they're not very busy, it's because they're not taking advantage of the tools, and that market is tough on them.
Yeah, absolutely. Hey guys, if you're getting any value out of this video, do us a favor, go ahead and click that like button, subscribe to the channel. We got a whole bunch of stuff coming your way this year we're totally excited about. And if you need to get in a situation and find out what you need to do to get pre-approved, or you have questions about the 2-1 buy down or closing cost concessions, you can get a hold of Eric right there. There's his phone number. Scan that QR code, it'll take you right to his calendar. And if you need my help and my team's help in your home search, my phone number is right there, as well as a link to my calendar, also in the description below. So Eric, lots of good stuff today. Appreciate you having the conversation with me. And guys, if you're watching the video, drop a comment below. Let me know if you're all about these closing cost concessions. What can you expect if you're in the market? I would love to hear your thoughts. Obviously, we are here to help anybody help get into a home if the time is right. We never suggest that the time is always right. It is always based upon everyone's own personal situation. But Eric, thanks again for jumping on here today. Any final thoughts before we wrap it up?
Oh, I think it's powerful, right? Like, drop comments below. That way, because we can always learn, but whatever's worked for you or some experience of things that you've heard, put it in there, because that creates conversation, and someone can learn from that and maybe help get them in their dream home.
Yeah, absolutely. All right, guys, that's all we got for you today. Thanks so much for watching. Have a great day, and we'll catch you in the next one.